Welcome, ladies and gentlemen, to the SEMA SCS with AZB pre-scene snack wheels strategic analysis video, part one actually, because we will be looking at the company strategically from multiple lenses. Before I get started, a gentle reminder, excuse me, a gentle reminder to everyone, those of you who are viewing the content in various platforms, in various ways and means, to visit the website www.semascs.com. If, as at the point of watching this video, if you still have about 4 weeks, 3 to 4 weeks, or even 5 weeks possibly to the exam, it's still not too late to be part of the SEMA SCS with AZB main coaching program, which you can review all the options and be part of, get access to the recordings and catch up easily as well. The program is designed to be able for you to be able to absorb very easily. Furthermore, I would like to invite you to preview the work through the official YouTube playlist as well. All the links can be found in the description section. And in fact, part of the strategic analysis that we are going to look at today, because currently in this video, we are going to focus on the SWOT analysis of it under the current position audit of snack wheel. That is also made available to you. You can download it through the self-study content folder, for which the link is included below. For anyone who already has the content folder access, just re-log in. If you're watching this video after some time, just re-log in and you will find this document also added now. On that note, let's get started. You know that there is a strategic analysis activity that is assigned at the early stages of the SEMA SCS with AZB coaching program. And this is the response sheet for that. And what happens through this document is that we analyze snack wheel and its industry through a categorical breakdown under current position audit, strategic options identification, governance and culture, future of snack wheel, risk management, cyber risk, and change management. So these are the main 7 areas, but in this video, which is the first part of the several or multiple video series that we will have on the strategic analysis, we are going to focus on the SWOT analysis alone. And the SWOT analysis is the most, and it's a personal favorite actually. As a person who's been teaching and who's been in the corporate sector, working in analysis roles as well as a financial and investment analyst, the SWOT is in fact one of the most simplest but most effective tools to understand a business, because it looks at everything, right? It looks at the good and the bad. It looks at what you can do, what you cannot do. It looks at the internal environment of the business and the external aspect of the business. And when you look at other tools, after having done a SWOT, it almost becomes so easy to apply, Porter's 5 forces, or strategic options identification, or Porter's generic strategies, or performance pyramid, whatever model that you want to use. After you do a SWOT, everything becomes easy because you've looked at the business in multiple angles. So it is in that interest that we do the most comprehensive SWOT for any pre-scene and any business that we can do. Let's start with the strengths. Here you go. So I'm going to zoom in for better view. We're going to focus each of the categories one by one. First, the strengths. So snack wheel has the first mover, or had the first mover advantage in West area. They entered the market in 2007, being the first company. The second player only entered in 2009, which is Munch Bike. It's a highly profitable business and a large quoted company in a well-regulated stock exchange. There are good governance hints such as a highly experienced set of board members and reasonable separation of roles with good separation of independent committees. And Snackwheel is the largest fast food delivery platform in West area, serving 22% of fast food outlets in West area. That is about 12,000 outlets out of 55,000 total number of outlets in West area alone. So 22% is a significantly strong number. It's 1/5 of the market, more than 1/5 of the market. Internet-based model allows for unlimited accessibility. There is really no limit to how many users can access your system through their smartphones. There is unlimited accessibility, or only limited by the number of couriers and the number of restaurants and the demand that they can fulfill. a large courier base who are provided online training at induction. So we have a trained courier base. We don't really just have a courier who just registers and starts using the app. No, we have an online training. That is a critical strength. So they are trained at induction and provided with competitive remuneration across the market. We have 3,000 full-time couriers and 23,000 independent couriers who are paid a fixed rate per delivery regardless of the distance traveled, etc. So that is also, I mean, you have, two sides to that coin, but one of the strengths is that despite, the variability of the delivery factors, we pay a fixed rate, which can be a positive to the finances. We have 5 restaurant partners being Westaria's top fast food chains, and we have a very strong relationship with them. Taste Burger is the leading burger chain in Westaria, listed and a large entity with a reputation of their own at stake when we work with them and when they work with us. So they might be extra vigilant to give us the best kind of food, etc. Steam Pizza is the leading pizza chain, and Baguetto and Lusk Chicken hold number 2 position in sandwich. So out of the 5 restaurant partners we have, 2 of them are the market leaders, 2 of them are the market number 2s, and one we have a prominent bakery chain. Strong sales strategy with heavy aggressive advertising. As a mobile application, you generally have to do that, but we have indications in the pre-scene that we have aggressive advertising. A strong vision, mission, and value set leading to a strong organizational ethos and culture. We have a very experienced senior management, a highly experienced chairman, and strong board of directors with good track record, which also funnels into the corporate governance healthy track. We have our own star CEO with a high business familiarity level, Ahmed Farah, who joined the company 2 years after beginning the company and has held the CIO position, has played a major role in one of the biggest updates in the software of the company, and is currently holding the CEO position. So someone who knows this business inside out, someone who has been in the business for 13 years, from an internal business perspective, that might be a major plus. Highly integrated and sophisticated IT system with heavy investments in IT security, and a dedicated CIO on the top management for top level leadership in IT. That's a major strength as a IT company, because even though we might be in the business of fast food delivery, Snackwheel is not a fast food business. It's not a restaurant chain. It doesn't manufacture food. It's an IT company. It has a software through a data center and it manages that. So we have top level leadership. We have a dedicated IT team. We have in-house IT staff. We have a highly IT capable, IT savvy CEO. From all those aspects, we are very strong from our IT end. An advanced data center that mirrors a live hot backup managed by highly qualified specialists and experts in that system that makes sure, that if anything ever goes wrong, we can easily switch to a live backup and maintain or rather avoid any sort of disruptions the business. We have an in-house dedicated IT team, which if you remember from the pre-scene understanding video, you remember that this team, the in-house IT team, developed the software for the courier tablet and the customer app. They were the ones who did it. The third-party consultancy got only involved with the data center software. Strong data ownership policy with all historical data ownership maintained with us. A lagging competitor in Munchbike with weak comparable financials. In the financials analysis, we realized that Munchbike in many areas is doing poorly, which feeds to our strength at the end of the day. If they are the number 2 player, then we are really well off. Strong financials in terms of rising margins, excellent cost management, healthy asset and capital utilization ratios, low gearing level, high interest cover, low interest rate. Comparably, we have a 7.5 interest rate compared to the 10% of Munchbike. Healthy working capital management and increasing cash balance, all pointing out to a very strong financial position. So those are the strengths of this company. Now, I would like to look at the weaknesses. Actually, when from an overview perspective, the weaknesses don't seem to be that many. We have a volatile, marginally declining MPS with a 0.7 beta pointing to a market perception of a low potential stock, or rather low performing stock. However, the potential seems to be great. We looked at the ways and means of how this potential can improve when we did the financials analysis. Then another question that one could ask is the board balanced? Because there seemed to be a little heaviness on the executive side with one additional member compared to the executive versus non-executive mix. But that doesn't mean that corporate governance is weak or not necessarily a breach, because corporate governance is, end of the day, anyway not a mandate. It's a voluntary adoption. However, when the executive team is larger, it's bigger, there can be situations where in the board meetings, the decisions and the inputs of the non-executive team is a little overshadowed by the executive opinion. So we want to be a little vigilant on that aspect. A heavy dependency on technology with the need to evolve and upgrade itself continuously, and we do see that has been happening. But the need, it means that we have to stay on our toes, thus requiring high levels of technical and technological expertise and tech savviness. So we are internet dependent, and we are smart device dependent, and we are technology dependent, and all of these dependencies can cause certain frictions in the value chain and how it operates. Only 5 restaurant partners, and we are exposed to severe risk of partners pulling out. In addition to this, I want to highlight another important fact is that what if the food quality of the restaurants is weak or bad? That is a major and severe risk that we depend on restaurants, and we depend on their delivery of the quality of the food, even though it's the responsibility of the restaurant partner, and it has a tendency that we could sort of point to the restaurant's direction if something of a blame comes to us in that manner. However, it will have a ripple effect on our performance as well, as a general sentiment in the market to say that Snackwheel's application is not reliable. When you order food from the application, the food doesn't taste good, the food quality is bad. We can't really have that. So we want to be vigilant on that, on the dependency that we have on our restaurant partners. We have to be relying on, and that reliance creates a point of weakness on the government and other regulatory bodies. Health and safety agencies are reliant as well, because health and safety, especially in the F&B industry or the food industry, is a major element, major aspect. And because there's a movement of transition between the preparation of the food, the moment the food is prepared, to the moment the food is received at the customer's doorstep. Even during this transition, there can be concerns and there can be reasons to why food quality can be managed. And during that transition period of that food or the meal, it is our responsibility. Snackwheel holds responsible for the quality of the food through the insulation boxes, the delivery, the way it's delivered, etc. So there can be contamination risks, etc. during that period as well. So we want to be really vigilant on the health and safety side. This can be a major pain point if we fall short. Couriers drive service quality, exposing to reputation risk in various ways. Even if the courier is rude, that can fall back on the reputation of the company. How you have heard the stories of FedEx and UPS in America. Potential of low bargaining power with restaurant partners due to their market power and position, especially the fact that even though there's a huge positive that we are working with a great set of restaurant partners, it also indicates to our reliance on them that they could have a higher bargaining power in negotiating certain terms and conditions in their agreement with us. So we want to be a little vigilant there. Currently, operations are limited to West area, limiting business potential to the local market. So it's a local company, a local business operating only in West area, and that can always be a weakness. There can be a longer value chain, there can be other opportunities to tap into, there can be forex angles that we might benefit with if we had the exposure to an international market. However, currently we don't have that. That brings me to, before I look at the opportunities, which is a more positive aspect, I want to, in tandem with the weakness, first I want to look at the threats. So competitive threats that can easily arise with better restaurant partners or courier-based improvements. Obviously, currently we do seem to have a healthy position in terms of competition. We seem to be the market leader. We seem to have the best partners. We seem to have the biggest number of outlets served, etc. However, there is a severe competitive threat. We never know what can happen. Restaurant partners could launch their own delivery service. They might, decide that they can take care of that aspect themselves, even though it is unlikely. You always find courageous people sometimes. Courier-based improvements. What if restaurant partners, other competitive fast food delivery companies like Munchbike, what if they absorb our couriers with better deals, etc.? So there is a competitive threat. We are exposed to severe cybersecurity threat. The fact that we are a heavily IT-oriented company itself means that we are easily exposed to severe cybersecurity threats like data theft, hacking, social engineering, viruses, hardware failure, backup failures, etc. So just don't believe that just because you have a mirror site, that it means that you are well and safe. There can be attacks to both the mirror site and the live site as well, with very advanced hacking. Or it could be, and it could be, one precaution could be that the mirror site is a secret that nobody knows, and it's a well kept secret, only known to the related parties. We are exposed to data privacy threat. That we hold customer information. We might be even holding supplier, restaurant partner information, sensitive information of their businesses. We do own their data. A lot of the customer behavioral data is owned by us. So from all these angles, we are exposed to data privacy threat from a hacking angle or from a mismanagement angle as well. Threats related to poor food quality, which we touched on earlier as well. I told you that it's a major risk or major weakness, the fact that we depend on this element, but the threat can actually manifest through the food quality angle. Restaurant partners backing out or any supply chain disruptions, especially in terms of new tech implementations and expansion disruptions, etc. So if we try to expand, if a restaurant partner tries to expand, if the IT systems require expansion and upgradation, how can that work? So we can have all kinds of threats and all kinds of angles of how a restaurant partner's reaction can affect our business, because also the fact that we are only working with 5. So do we have prospective players? What will Tasteburger think if we start, or if we want to absorb the second largest burger chain into the Snackwheel system as well? So these are things to consider when you're trying to move in such directions. Breaches of any ethical aspects and values, customer need and taste evolution, and the rapidity of that change. So we want to always maintain as IT and application, mobile application, this is a common threat. Customer tastes, customer needs rapidly evolve. So even in terms of interface, now when you have an iOS version and a Google Play Store version, Android version of your software, and if iOS upgrades to iOS 15 or iOS 16 and its user interface is completely and drastically upgraded, changed, then what happens is that if the software is also still the legacy, the old form of software, that can have a negative impact, negative effect on how we are viewed. So what happens is that when the OS operating system gets upgraded, we always see a tendency, I'm sure you are aware of this, you always see a tendency for the application in the application to also get an upgrade from a user interface angle. So you have to be vigilant about all of that, how the customer needs and tastes evolve, and how we need to keep up to date with that. For example, a good example I can tell you is that when the operating systems of Apple introduced the dark mode in their iOS versions, very soon, within couple of months, we started to see dark modes appearing of all softwares, all mobile applications with attached to iOS, and customers demanding dark mode in many of the most popular mobile applications in the Apple ecosystem. Courier safety is a major factor. So courier safety related incidents can pose a severe threat. Mobile application related regulation and supervision initiatives by governments and authorities, maintenance failures or shortcomings leading to concerns in system, IT system, security system, infrastructural system, vehicle maintenance, even though it's not a part, it's not our responsibility, it's a courier's responsibility. But what if it's a full-time courier and the courier is therefore our employee, and therefore there's an indirect connection there? So Any kind of infrastructural integrity weaknesses can pose a threat to us. Threats to reputation, obviously, hostile takeovers can be a threat, regulatory and legal risk based on various incidents that can happen, all kinds of incidents from a macro perspective, micro perspective, internal business perspective, political, economical, social, legal, all angles. Various incidents can pose a regulatory and legal risk. Cash flow risk is a matter to be careful about. We want to manage our treasury really well. Unpredictable behaviors of shareholders and market changes. The fact that our share price is also somewhat low performing in the recent past, actually in the past year, with a slight slope, also points to something of a required vigilance, extra vigilance, because we want to be on ahead of our shareholders. We want to, we don't want to be the kind of company that reacts, but the kind of company that is a more proactive one and knows what to do before something happens. Questionable behaviors of executives from the perspective of bribery, insider trading, fraudulent behavior, etc., can be a major threat. Losing critical staff, there are many indications throughout the pre-scene that we heavily rely on IT specialists, IT experts. So that can be a major threat. If we start losing critical people, cybersecurity capabilities are only limited to known threat assessments. That's a general threat with cybersecurity, something that I wanted to expand on. So you only know, or rather, you can only prevent what you know. What you don't know is something that you're purely exposed to, and that can be the residual aspect of the cybersecurity risk, or completely, new, like risks that you did not anticipate in any way or form. Because cybersecurity is something that continuously, updates and upgrades, and it keeps evolving and changing. So hackers, they just keep getting better and better. Unionization of couriers can be, a sort of consolidation of couriers, can demand bigger rewards, returns, reimbursements, better benefits, better safety, better insurance, etc., and other labor-related threats. Any incident that would disrupt internet connectivity in West area, because all of this works based on the internet availability. If internet connectivity is disrupted through a power outage, I don't know, EMP crash, solar flare, doesn't matter. If internet is disrupted, if the internet is going dark, we are going to face a threat. Potential for high staff turnover is a major threat aspect in this sort of business. Couriers can leave, employees can leave, especially couriers, because you generally think about it, couriers, they don't work, or you don't get people who are working for couriers. Not a majority of them definitely are in it for life. They are either moving, transitioning, they're doing with part-time, etc., and waiting for the next best thing, and the moment they find that, they leave. So high staff turnover can be a threat. And cheaper pricing by competitors. So various minute strategies like this, cheaper pricing is a competitive strategy, can pose a threat to Snackwheel and our operations. So that brings me to the opportunities discussion. All right, there we go. So opportunity is actually, West area is a well-developed large country, indicating good potential. And even when you look at the West area fast food revenue size, it's 172 billion. We only have about 0.75% or 0.73% of that market volume, of that revenue size. That points to a massive potential. Maybe bringing in a few extra restaurant partners will easily hike the market share that we have, as long as we can service it properly. A growing younger demography in the market that carries long-term revenue potential due to app familiarity. So currently you see that 60 plus crowd, they're not using this much. They only order maybe once or less than 3 times a week. But what happens is that as time goes by, the younger demography keeps moving further to the upper demography ranges, and they are more familiar with mobile applications. And by the time they've ordered food online for 10 years, they are only used to that. They only know that, and they keep doing that. So that opens up a long-term revenue stream and channel for the company. Options to bringing in additional restaurant partners is always an opportunity that we can consider. Options to expand revenue stream by innovations on the service end, innovations on the product end, working with the restaurant partners, and innovations on the digital channel end through the digital engagement means of the software. You see different kinds of things, right? Coupons, digital coupons, discount coupons, seasonal offers, etc. All kinds of things are offered. A booming industry valued currently at $172 billion, also indicating that market share, despite the number one status from a revenue angle, is 0.7%, pointing to further potential. Advancements of IT systems capability enabling further innovation and expansion in customer, courier, and partner experience. So our IT system is sophisticated, it's highly integrated, it's doing really well, but there's always the potential to advance that, to improve the software, improve the hardware. Uh, there are other aspects, to outsource elements of IT services also. One aspect of that is this point, cloud technology creating the potential to eliminate hardware and site management requirements at the data center. Because we currently own and manage the data center, it's our responsibility. We have to have dedicated IT staff to manage the hardware end of things. But one option currently is, you easily outsource it to a company like AWS, Amazon Web Services. And what they do is they take care of all of that work, and you only have, it's basically the software being managed as a service. So you only have a small team. The entire team who used to do the hardware management and the data center management, they are redundant now. We don't need them. We have a team who is looking at the software end of things, and the particular means of that is called SaaS, which is software as a service. So that's a potential opportunity. Significant number of collaborative opportunities among multiple groups of stakeholders with restaurant partners, couriers, financiers, investors, etc. There is really no limit to thinking and imagining different ways and means of how you can collaborate with all of these different stakeholders. International expansion opportunity and high potential due to the limited physical infrastructural requirements. You know that we don't need big offices, 20-floor buildings. We don't need any of that. We just need a good base, a good center for our IT systems, and a good set of employees, and you can deploy your software, maybe good leadership, and you can easily, if you can find the couriers and if you can find the restaurant partners, you just connect them. So it doesn't really require a lot of heavy capital from the angle of current Snackweel's position. We are number one in a large country. It might be very easy for us to enter a new market, maybe a small country close to Westeria, maybe a country that Westeria has good relationships with, etc. Tendency for digital and technology literacy rising among all the groups, expanding potential market size further. So this is another angle to think, where the older age groups, older demographies are becoming better literate digitally. They are getting better at using the smartphone, using applications. So with that knowledge, as their familiarity with the smartphone usage grows, they're going to find it easier to order food online. That's an opportunity that can be big. We might even have, YouTube videos or whatever that can train, that easily shows people how the application is used. Attractive advertisements, television advertisements work. You have your grandparents or someone at home, and they watch the television, and there's a 1-minute television ad showing how easy it is to use the app, how easy it is to download the app. So what happens is that your grandparents might just try it out. Okay, click App Store, type this, download, open, wow, right, you order, right? And you might get a help from a grandchild or whatever. Capital markets and large deposits. But before that, there is an opportunity to monetize currently unmonetized, untapped elements within the app by offering, that is basically differentiation, right? Differentiation of the service by offering various forms of little minute details. Most, as you know, right, a lot of companies that were into delivery, they started in one stream, one channel. Either they delivered groceries, either they delivered fast food, etc. But when you look at these companies today, most of these companies have expanded their offerings, by various means. Cab services, they only used to have the sedan and the and the van. But now you find, all kinds of vehicles, the cars, the sedan, different versions, high luxury cars, etc. So what happens is that you always can differentiate, and that differentiation can allow you to monetize certain untapped areas or unmonetized areas earlier. Offer subscription models. For example, you don't have to pay for every delivery. What you do is, you're a special customer, you get a subscription, you make a monthly fee, and within maybe a limit of number of services which is beneficial to the customer, you don't have to pay extra. Even if you travel 100 times under that subscription model, you can do it for free. That can be an option. Capital markets and large deposits allow stronger access to capital, leading to capital utilization opportunities. We see that happening. We see Snackville injecting 100 million, nearly 100 million debt into the company last year, which seems to be a good tendency, which seems to have done well, and hopefully it does well in the future as well. Mergers and acquisitions are a great opportunity. Branding opportunities to be environmentally conscious with carbon neutral aspirations. That's a big plus point today in the modern dynamics. Reputationally also, it can benefit. It can attract environmentally sensitive customers and retain them. And also alternate and renewable energy adoption. As I mentioned, we have little infrastructural requirements. So having a solar installed, or using adaptable renewable energy methods is not likely to be very costly. We can be a zero carbon footprint company in no time if we need, and that's an opportunity to consider. High levels of retained earnings and cash richness, creating opportunities to invest. New technology implementation opportunities. I already spoke about how cloud can be a new tech. We can use big data, predictive analytics, AI, artificial intelligence, machine learning capabilities, other programming capabilities, etc. All kinds of ways and means can be used to improve innovation. Innovative and aggressive marketing can be used. We know that we are an aggressive advertiser. In that advertising, in the way we brand and market, we can come up with various means. I think in your research, I've shared a few videos of advertisements of fast food delivery companies, Uber, DoorDash, Just Eat, and you see how creative the advertisements are. Outsourcing opportunities, non-critical specialty functions, or providing selective outsourced services. So an example is the cloud service I mentioned earlier. Or you look at various ways or means of how you can outsource certain elements, even though it is very unlikely. Like, for example, you have 23,000 independent couriers. That's outsourcing more than almost at least 90 or 80% of your courier requirement to independent parties. Opportunities in ISO certification or similar standardizations for an IT company. Even getting recognitions like a great place to work, etc. Commitments to UN's sustainable development goals and therefore reputational benefits associated to that. Opportunities to attend and win industry awards. Global pandemics and similar events that confines people to homes, boosting online delivery opportunity. And I think when you look at most of the delivery companies in all kinds of industries, the boom suddenly happened, unprecedented growth, unprecedented profitability that they thought it would take 10 years, 20 years to materialized overnight, just because of COVID. And the hyper personalization opportunities for the user, for the mobile application actually. So the idea is that every user, every courier, every user who is using the mobile application can have their behavior can be tracked, their behavior can be monitored, what their favorite restaurant is, what their favorite deliverer or delivery person is. If they are in the vicinity, they might assign to it. What kind of food they like, what kind of times they log into, and when they log into the app at a particular time, what kind of food do they prefer to look for, so that you can bring those food items to the top of the scroll window, etc. So personalizing your own application to your own behavior, your own needs. Hyper personalization of mobile application, it's a big booming area in the software and the IT sector, is another opportunity that you can look at. So that marks the end of the comprehensive SWOT analysis that we are looking at as part of the strategic analysis of Snackville. Thank you very much, ladies and gentlemen. And what I want to point out is that please do make good use of this. You can download the SWOT from the self-study content folder. The link is given below. If you're accessing this through the YouTube and the fast prep guided prep content streams. Otherwise, happy learning, good luck. I will see you soon with another video on the strategic analysis of Snackville. Thank you and happy learning.